Hey projectors, welcome back to part 2 of week 36 of Dividend Challenge. The last video got kind of long, so I kind of want to just focus this video on my dividends and my portfolio. Since I'm going to be doing a lot of moving around here, it might be a little longer video. If I were to combine both, it would probably be like 40-minute video, so I didn't want to do that to you guys. But yeah, if you guys new to the Dividend Challenge, where I invest $200 every week, no matter how good about the market is, with the goal reaching 20,000 by the end of the year. I reached it last week in 35, but I'll go over it in the conclusion of the whole portfolio in this week. Also, week 35, I filmed it on the 28th, so it wasn't completely the end of the year. So 31st is the end of the year, so that's 3 more days, but I'm pretty sure I passed it. So without further ado, I'll just jump right to the video. And I'm sorry guys, I just realized when I was on this side, on the left side, you guys couldn't see like a lot of the stocks because it was covering it. So I learned my lesson. I'm gonna be on the left side now, bottom left corner. Because when I'm over there, it's better for you guys to see the stock. Because if you guys look over here real quick, you guys can't really see the market. But if I'm on the right side, you guys can see it better. But anyways, we'll just jump into the portfolio here. We'll log in. So last week, week 35, we're at $20,890. I don't see myself losing. That would be $1,100 in 3 days. So but we'll see. The market did fall on Monday, January 4th, but I think it recovered from now because I checked my Robinhood account and it kind of recovered. So let's see here. Oh, and it did recover. Cool. We actually had a little small dip here because it should have been $21.90, but not too bad. That's just a little $70 dip. But let's go over the portfolio here. So we're at $21,018.28, total gain of $3,804.82, a total return of 28.78%. So I can finally say, we did it, boys. We did it. We did it. 20,000 by the end of the year. That's great. Am I still gonna invest $200 every week? I think I will, just because it's just what I've been doing. If not, I'll probably change it to $1,000 a month just to make it single deposit. But the way I've been investing is that I get my whole paycheck and I throw it into crypto. So I don't know if that's gonna work, but I'll see what happens. I'll probably make an update video every month. Just to show you guys how my portfolio has been doing overall. But let's go into the portfolio. We'll kind of go to the conclusion at the end. So the first pie is aggressive ETF pie. We're at a total value of $10,593.35, total gain of $2,136.54, a total return of 32.57%. Let's go inside. This pie has been doing really well for me. 32.5%. I can't complain much here. VB up 57.26%, VA up 41.02%. and PWO up 43.55%. I'm kind of hesitant on just like throwing this whole pie away and, you know, reinvesting it somewhere else. But I feel like I could be getting better returns in the market and other stocks than this one. But let's go over the week here real quick. We're up 2.94% VB, up another 2.13 on VA. These three fell. VWO up 1.55%, up $85.73 for the week, up 8.82%. Yes, it's a solid pie. I'm not saying like it's a bad pie and like I'm switching things out. Like what I did with my first pie when I first started out, the one with AT&T and Starbucks, stuff like that. That was kind of like a whatever pie. This pie is not that bad. Like I think there's better returns out there, like Tesla and Amazon that has like absurd returns, where I'm probably gonna just move all my stuff to that pie. But the cool thing about M1 Finance is that the pie that you have, you can save the pie and come back to it and kind of reflect on how the pie is doing overall. I'll show you guys that later on when I go to make my new pies. So let's go to the next pie here. And the next pie is the dividend hunting pie. We're at total value of $5,257.79, up $1,102.63, up 34.33%. Let's go inside. And same thing in this pie. Like these pies didn't do me any wrong, you know, like they serve their purpose. They just, you know, getting dividends and stuff like that. I think at this point in time, I'd just rather have more upsurge stocks, because like by any means, like 36.55%, like that's nothing to complain about over 35 weeks. That's kind of insane amount. Let's go over the last week here. And I believe this one is also up. GOF up 1.76%. The other three are down for this week. Not too much. Only AG&C just because it has the most percentage out of all the pies. But even that's not too bad. Only down $22.45 for the week for this pie. So let's go to the last pie here. So last pie is work from home pie. This pie has been really up and down lately because of Zoom. Zoom did really well, and then I think Zoom fell a little bit more. That's probably one of the slices that I sell off on this pie, just because I think with the vaccine coming out, it's just gonna be all downhill from here. There's no more uptick for it, and just take the gain to go to another pie. I'll probably move it to check or something like that. We'll talk more about it when we get inside. So total value for this is $5,167.14, up $462.96, up 11.76%. Let's go inside. And Zoom's only at 32.04%. And I say only, but it was at one point it was like 90%. So that's why it's kind of disappointing. Check came up a little bit more, 25.51%. I'm probably going to sell all my Zoom off and redistribute throughout this pie. I'm planning to just throw it all into Chegg and a little bit of DocuSign and Microsoft, just kind of even it out. And overall this week is not doing too well. It's a negative $170.97, down 3.23%. Everything kind of fell. Adobe falling 6.28%, Zoom further falling 2.57%, and Chegg falling 1.1%. Microsoft fell to 4.27%. So like buy the dip, guys, right? So let's go into Zoom real quick. I'll show you guys how it has not been doing so well, so hot last 3 months. So ever since October, it's been falling. We kind of look at the last year here, where it just kind of peaked. It stopped at around October, and then November happened, and vaccine was announced, and then from then it's just been going downhill. I think it's a really good time to sell before the vaccine fully comes out to everyone, and then work from home is going to be completely gone, and people will move on from Zoom. So I think it's a really good time to sell. Let's go back here, and then we'll go over the activities. So January 4th was a deposit $200, but I got some dividends coming up to January 4th because a lot of end of the year dividends here. So the first one being VNQ with a dividend of $14.53. Next one being VB with a dividend of $9.65. Next one being GOF with a dividend of $12.02, and then we had to buy because this is all equal to over $25. So we got a morning buy of $40.82, and the rest of the dividends got bought right here at $211.68. Overall, cool. Let's go to holdings here. And I don't expect Zoom to be top 3. It is not. VP's in first place with 41.66%. VWO coming in second at 32.23%. And VA in third at 29.8%. VO also doing really well. I think it's the biggest return. It has the highest slice in the pie. Up $763.67, up 22.17%. Let's go to the bottom 3. Bottom 3, SHY. Goodbye, my friend. Today is the last day you're gonna be my pie. You've just been freeloading out here, man. You're gone. So SHY being down 0.21%. Microsoft barely breaking even at 0.24%, and Adobe being at 2.73%. I might switch over to Adobe too, just because I think it might have been a bad buy. I might just leave it a little bit in there and move it all to Chegg. I think Chegg is going to be like my forefront for that work from home pie, and I'm going to show you guys what I'm going to buy with the rest of the money that I'm taking off from the other 2 pies. So let's go to where you make pies. So you go research, and then you go to my pies. So this is where all of my pies are at, and you can kind of see here the aggressive ETF pie. You kind of see how it's been doing for the overall time. So you look at the last 5 years, it says overall pie, you kind of see here that's at $164.85, up 65.73%. But you kind of change it to the last year. Depends on what you're kind of trying to compare it to. And it's always compared to like the $100 mark. So last year, it's the $100 is like the baseline, right? You kind of compare pies like this. So I think that's pretty cool function that M1 Finance has. Like if you have FOMO on your old stuff, you can kind of do it like this way. So you can go back here and look at my old pie, which I'm not using anymore. It was called the growing pie. So this one had like the Starbucks and AT&T. So you kind of see how it's doing overall for the last year. So I started back in May. So you can kind of see here on the graph that it's at $80. And at the end today is at $83. So if I kept my whole growing pie like this, I would have made $3, which is like, come on, you know, compared to my aggressive ETF pie. You look at last year here. I started back in May, and it grew up to 110. So about $40 right there. That's cool, man. I think it'll be a pretty cool function if I'm able to switch this up to however the dates I want to be, because it's only 11% because it starts at the beginning of the year, it was at 100, right? And it fell down to $68. And from there, it's been kind of growing. For example, if you guys kept it from the beginning of the year and you guys kept it throughout it falling and you guys didn't do anything, it broke even and then outperformed from the previous year by 10%. So if we're able to get customized dates, I think that'd be a pretty cool function, because then you'll be able to see the actual percentage that you did for when you started the portfolio. I guess for next year, it doesn't really matter because I'll be starting from, you know, here. But for someone that started the middle of the year, I kind of want to see where it was at. Let's compare it to work from home pie. So work from home pie. So for work from home pie, we started around July-ish. So it was about $200, and then at the end, it's at $250, $240. So that's about a 20% return. Not bad. I'm glad I switched from growing pies to work from home pie. I gained 20%. So the next pie here, the last pie is dividend hunting pie. Go last year. Yeah, see the dip, it's crazy. So this one did not return back to normal from the dip, because the dip's at 100 and it's barely at 95%. So around May it was at $75, and now it's at $99. So it's also about a 20% return. If I were to put all my money into my aggressive ETF pie, I think I just would have done it insanely well. May is 84, and now it's at 112, so that's $40 return. So that's about 40% return. So, you know, it is what it is. You gotta diversify, I guess. But yeah, let's make our new pie now. I might actually just make a duplicate of this so I can have this exact pie inside my portfolio so I can compare to it later on. So there's actually no duplicate function on M1 Finance, but it's a little workaround here. You can share this pie, copy this link, paste into your URL, and then you'll get something like this. And then all you gotta do is click to save to my account, and then it just shows up onto your pies, and it's right here unused. So I can edit this one because I don't have to like swap things out. So I'm gonna edit this right now. And I'm gonna move some stuff out here. So I'm gonna take out zoom, remove. I'm gonna change this to 20%, and I'm gonna change this 30. I might change this to 20 as well. I'm gonna change DocuSign to 30. And also, you guys didn't know this, just to give you guys heads up, whenever you guys are doing this, they're actually buying and selling the stock. So you'll get a gain and loss on these stocks. So you will get taxed when you do this. So if you guys are trying to get taxed as a long-term investment, the clock does restart on this. So for long-term investments, you have to hold the stock for a year. And I bought this stock back in July. So instead of July 2021, it will be 1 year. It will actually be January 2022 when it'll be a full year. So when I'm doing this, I'm actually getting a tax as a short-term investment, not long-term, even when I sell it in July. So I'll change this to work from home pie 2, and then I'll leave it quarantine mode as the detail. Save here. So this is pretty much them telling you that it's going to be sold and bought the next day, because M1 Finance doesn't buy and sell constantly. It's only trades once a day, unless you have the premium function, trades twice a day. But even so, right now it's like midnight. That's why I like doing this stuff at midnight. So you just confirm, and that's it. So we're done. So let's go double check here. So 30, 30, 20, 20. Cool. So let's go back to my pies. So I'm gonna get rid of these 2 pies. They're to ETF pie and the dividend hunting pie. But these 3 pies are in the project finance pies. So all I gotta do is just remove it in the project finance pie. But let me create the new pie first, and then I'll do that later. So I'm actually gonna add Amazon, Tesla, and the last one's be TQQQ, which is like a tech stock. Add this to a basket. So those are my 3 big hitters that have been having insane returns. If you look at TQQQ, went from $50 to the very low to 170. That's a 200% return. It's one of the stocks that my friend told me back when I first started trading stocks, and I had it at 100-ish, and I sold it to buy some more AT&T stock on my Webull. Kind of regret it, but it is what it is. So yeah, I'm gonna rebuy into this one. And you guys should know what Amazon and Tesla is. So Amazon, like the online company, and Tesla, the car company. I'll show you guys here. So Amazon, year return, that's just insane. It was at about 1,800, and now it's at 3,000, so it's 71%. And this stock didn't really have a dip from March drops, so Amazon's forefront for everything. Tesla is kind of one of the more risky stocks that I'm playing right here. We don't know what's gonna happen with Tesla. Look at Tesla last year. Because of the split, it's at 700%. I don't see it having another split anytime soon, but you know, at this rate, it's better than jumping now than never, I guess. So these 3 are the ones I'm gonna be picking to play for this pie. I guess I'm gonna name this pie YOLO pie, because YOLO / FOMO, because I missed out on a lot of money. I think I'm gonna put 10,000 on this to 0. LOL. So let's change the percentage here. I think I want to do TQQQ. I want to do 50% here, and then 25. I think that's pretty fair. Yeah, let's do that. That sounds good. So save here. And that's the pie here. And you're looking here, if I started back in January, I've been up 244%. Insane. But you know, stocks, man, stocks. Let's go with my pies. So let's finish it up here. So you go project finance, you can change these pies out here. So edit, change these out, delete this one and this one, remove, or add from my pies. We're gonna add YOLO FOMO. Here we go, and then add it. We're gonna do 50%. So it'll be 10K for both. So we're gonna get a lot more Chegg, a lot more Adobe, a lot more Microsoft, and a lot more DocuSign. So project finance, that's it. We're gonna rename it End of the Rainbow. Tickets from my friend. So let's save here. And same thing, you confirm that you're gonna sell and buy everything. Confirm. So yeah, that's it. We'll see what happens a month from now. I'll recap to you guys, see if I'm crying or I'm happy. That's pretty cool. I'll probably compare the 2 pies from Project Finance 1 and Project Finance 2, and then go over all the new pies and how much stocks I have in each of them, because I don't know right now what the breakdown is, because it'll buy at tomorrow's price, so it might be a little different from right now. So we'll see how well it does, if I regret selling my old stuff and putting this stuff in. I do agree this is gonna be a lot riskier, but this is gonna be a lot more long term, and I'm not trying to reach 20,000 by the end of the year. I'm cool with dipping, turning left, turning right, up, down, you know, I'm cool with that. So it's gonna be really long term, and hopefully we do well. So that's pretty much gonna wrap today's video. We're gonna have all these new buys, 7 new buys, 12 new sells. Trade window is gonna start at 6:30 a.m. When the market opens, and yeah, I'm excited. We'll see how it goes. So that's gonna wrap it up today's video. Let me know down below if you guys switch out your stocks for the end of the year, or you guys kind of do a rebalance at the end of the year, or you guys kind of got out of the game. I know some friends got out of the game, took all their gains, they got off the market, and they're starting their full-time jobs again, so they don't have time to like day trade and stuff like that. So that's cool too, but still I highly recommend you guys don't take everything out, just because just being in the market, you kind of get the feel of what's happening in the world, and I think you'll learn by just having something in there, and you slowly learn every day what's happening in the world, because when stock dips, you gotta figure out what's going on in that stock. Just hold a few stocks. I wouldn't recommend selling everything. Just maybe hold 1 or 2 stocks that you kind of believe in and you kind of want to see what's going on, because majority of the time stocks go up unless you're a small business and you have like no business model. But I think like if you just throw into like an ETF, I think you're gonna do well for the long term. But let me know down below what your thoughts are, and thank you guys for watching this video. If you guys watched all 36 videos, this whole series, comment down below as well. You guys are troopers, true supporters out here. I can't thank you guys enough for watching this. I appreciate the support and the views. I know like I don't get that many views, and I kind of just do the videos for myself, so it's always a bonus when I get a cool comment that you guys leave down here. But yeah, thank you guys for watching this video. I appreciate all you guys. Give it a thumbs up if you guys like the video, subscribe to the channel for a lot more content, ring the notification bell for all the updates, and I'll see you guys in the next one. Bye.